Kevin Warsh just had his first FOMC meeting and the markets crashed. Despite no major announcements coming out of the meeting, the Fed held rates steady, but that wasn't the story. The story is that they killed the old Fed playbook. He shortened the statement, he avoided sharing his own dot plot for the forecast, he eliminated forward guidance, and he started talking about a task force. That sounds boring, but it's not. That's how the Fed chair builds the machinery for a major market move that the market doesn't know is coming right now. Today, I'm going to show you what Warsh may be preparing for, why markets panicked, and what it means for Bitcoin when the Fed does what it always does. This is Dante Cook with Bitcoin Simply. Let's go. Yo, real quick before we get into it, believe it or not, a lot of you that watch this show aren't subscribed to it. So if you want help cutting through the noise, understanding what's really going on in Bitcoin, hit subscribe and tap the notification bell. Let's go. Thank goodness for the World Cup, because this is the worst time of the year. The NFL is over, the NBA is over, and the only content that we have is to watch Knicks fans sucking on people's toes during the championship parade. My guy needs to go to jail immediately. And you know what other period in time sucks? FOMC meetings. We've made a theater out of these events, and it's crazy that a single person, based on their words, what they do say, what they don't say, affects the markets in the entire world. And Kevin Warsh's first FOMC meeting was no different. When he took the stand, stocks, Bitcoin, and gold sold off. He decided to reiterate that he was going to hold rates steady between 3.5% and 3.75%, but he did do some things to break the mold. He killed the old Fed playbook. Listen to what he had to say.
And commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision.
We've all heard about the 2% inflation mandate before, how the Fed's going to return us to a 2% target. Okay, that's old news, nothing burger. But removing forward guidance, that's a change. No more hand-holding, no more clear roadmap, no more markets and AI bot trading algorithms front-running what could happen in 6 months. No more easy money. Stocks fell, yields jumped, Bitcoin sold off, and gold sold off, like we said earlier in the episode, because markets are now more uncertain. And that causes markets to tighten, because even if they don't know exactly what the Fed's going to do, there's more uncertainty, and when there's more uncertainty, people take less risk. But the most interesting thing about Kevin Warsh's comments at the FOMC meeting was this task force.
But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision.
Why create a task force? You're the new Fed chair. You can do what you want to do. I'll tell you exactly why. It's so you can delay making decisions. You all can do market listening. You can engage the economy and the economists and the experts on what's actually happening and not make any decisions. Any decision that you do make, you can always fall back on the recommendations of the task force. But ultimately, the main reason is so that they can keep the playbook the same as usual. And the real question isn't what Kevin Warsh does at his first meeting. It's what he does when stuff really hits the fan, when something breaks and something collapses. And I keep banging the table. Now I actually have a table. It's interesting. The first thing that's going to happen when the thing breaks, that's going to cause this thing to break the markets, is this AI bubble that we're in. AI is sucking all of the capital out of markets right now, and it's only a matter of time before people realize that the investment thesis into these instruments and into these companies and vehicles and infrastructure isn't all going to work out. Free money is flowing into this stuff. like Panthalassa, a Portland startup backed by none other than Peter Thiel, which just raised $140 million at $1 billion valuation to build lollipops which function as AI data centers in the middle of the ocean. He says that they're going to have enough renewable energy to power the entire world.
The ambition is to replace all fossil fuel generated power and fuel with renewable power and fuel. As far as I know, our technology is the first one that can do that for the whole world.
Where have we heard this before? Oh yeah, like Elon saying they're going to build 100 gigafactories like Tesla built. And that's going to solve all of the world's power.
Say, like, what would it take to transition the whole world to sustainable energy? What kind of throughput would you actually need? And you need 100 gigafactories.
So 100 of these.
100 of these, yes.
That would make the United States.
No, the whole world.
The whole world.
The whole world. All energy.
That's it?
Yeah.
That sounds.
It's manageable.
That sounds manageable.
This is an old video, but you can see the theater behind this with Leonardo DiCaprio interviewing him. Why is a Hollywood actor interviewing Elon Musk talking about AI, data, and sustainable energy? It's because this is the main narrative that's going to drive all of the investment and all of the government overreach that we're going to see over the next 10 years. That's not the point of the episode. All of the capital and investment into AI is being significantly overstated and overinvested. The demand actually isn't there. That's why you can see all of these AI companies moving to a per token payment model. It's because they can't actually sustain the cost and the people's usage that they're actually using in the AI demand. And companies are already starting to pull back. And when the AI play pops, it's going to be bigger than the subprime mortgage crisis. Mark my words. And this is when we look at what Kevin Warsh actually does, what the Fed always does. The new too big to fail industries aren't going to be Freddie Mac and Fannie Mae. They're going to be Anthropic, OpenAI, and Microsoft.
The greatest part for crypto is that if we do get an AI credit event, number one, it'll be bigger than 2008 because the whole world is on this delusion that AI is the biggest technology ever. We're going to build more CapEx per percentage of GDP than we did with the railroads, much bigger than subprime. And the Fed can't print Moore's law. I don't care how much money that you throw at this thing, you can't change the fact that a chip gets better every 2 years, even if you pump $10 trillion into the economy. So what's the first response going to be by the financial authorities to try to save the banks? They're going to say, oh, we just need to shovel fiat money in. And at that point, investors are going to say, I do not want to put any new capital, whether it's free or not, into AI because it does not meet its cost of capital. So therefore, this capital goes straight to crypto. And this is the implosion of the AI bubble and the follow-on money printing that's going to happen, especially in the United States, to try to shave the system from this gross capital misallocation that's happened over the last, let's call it, 6 to 7 years. By that point, is going to dwarf subprime and is going to take us to Bitcoin a million or whatever, right? This is the big print. Mm-hmm. If you get this, if this thesis is correct and you time this well, you'll never work again. This is the John Paulson subprime trade. This is the Big Short Michael Burry trade of this particular epoch. And that's kind of how I'm thinking about this. I don't know when this is going to happen, but I know I gotta get this right. Because if you're able to be liquid at this situation, and when this fiat money floods into the system, it can't go to the AI trade anymore because, again, the Fed can't print Moore's law. Can't make a fucking depreciation schedule change no matter how much money you print. And I think that's the best argument for why crypto is going to do so fucking well when AI completely implodes.
The biggest beneficiary of this capital rotating out of AI into crypto will be Bitcoin. We've already talked about this. Arthur Hager said Bitcoin to 1 million. That might be overstating it, but we're going to see a massive run up when the capital rotates out of these AI trades into the only thing that is not infinite. We're going to have infinite drug discovery, infinite transportation with driverless cars, infinite labor, infinite capital flowing into this infrastructure, infinite energy. The only thing that's not going to be infinite is Bitcoin, the only currency that is also tied into energy that has a fixed monetary supply. And if you believe that future, you don't want to sell your Bitcoin. It's like having expensive real estate in Manhattan. You don't sell that real estate, you begin to borrow from it. And that's exactly why we partner with Ledn. They allow you to borrow from your Bitcoin holdings without selling it because it's pristine capital and you don't want to trade your most valuable asset, Bitcoin, a scarce digital asset, for an infinite fiat currency, dollars. Use the link in the description to get started. Right now, people are distracted because MicroStrategy is selling off. Bitcoin's biggest backer and the biggest buyer of Bitcoin in the world is having its trouble. Strategy and Stretch are both selling off. That premium or that par value that we talked about before is being evaporated. And right now, the loudest voices are the ones that win the narrative.
Well, Michael Saylor's Ponzi is completely collapsing right now. Stretch, STRC is the ticker, which was supposed to be pegged to $100, is now below 83. It's sitting at like $82 right now. This is the stock, if you forgot, in which he pays 11.5% interest in cash, and it's pegged based on $100. Every time the stock goes over $100, Michael Saylor sells it in order to buy more Bitcoin. Unfortunately, the price of Bitcoin keeps fucking collapsing because of Michael Saylor, and now Stretch is completely, the price is imploding.
All right, there's only so much of that I can listen to. I don't take my financial advice from Nick O'Neill. Anybody that wears sunglasses in the middle of the day by themselves at an apartment, I'm suspicious of. I tend to watch what the smart money's doing. Smart money like Ricardo Salinas, the billionaire from Mexico who has 70% of his net worth into Bitcoin right now. He talks about what's actually happening in the global economy and why you want to be owning scarce assets like Bitcoin.
In this context of wild creation of false purchasing power, what can the price of Bitcoin do? It's going to go up together with all the other real assets in the world. All the assets are going up because of inflation. Inflation meaning the expansion of false purchasing power. And that, there's a lot of confusion here. What is money? What is purchasing power? What is credit? What is the balance sheet expansion of the Fed and the central banks? But we'll simplify it. Government spending worldwide, which is not correspondent with taxes. There's a gap. That gap is purchasing power that's being stolen from the people by the governments. And that chunk of new purchasing power creation debases the whole currency. So everything that is denominated in that currency has to go up in value. Everything. Cars and steak and gas and Bitcoin and gold and stocks, everything goes up. So when you say, what is the price of Bitcoin? I don't know. I've been around Bitcoin since 2013. We've had some pretty wild up and downs, right? We all would like to see this going direct to the moon, but of course, it's never going to happen like that. So for most people, what they should think is, as soon as you get some fiat, you want to get rid of it, instead of buying some stuff, buy some Bitcoin and store it. And don't look at it. Don't look at it. It's like when you buy a house. Are you checking the price of your house every day on the market? No, of course not. But eventually you turn around, in 10 or 15 or 20 years later, the house is worth a lot more money. That's the way you should look at Bitcoin.
Inflation isn't some random market force. It's theft. Everything denominated in fiat is losing value relative to scarce assets and hard assets like Bitcoin, gold, or other things that have a fixed supply. The plot? As soon as you get fiat, move it into Bitcoin. Because over time, Bitcoin will make you wealthy. Bitcoin's 200-week moving average continues to move up and it now sits at 62,000. It's a savings vehicle that tends to make you wealthy, not quickly, but over time. And so although half of the coins purchased right now are underwater, you have to understand what's going on in the long term. Keep stacking quietly and silently behind the scenes. One day you're going to be a whole corner. One day you're going to be a Bitcoin billionaire. And like Tyler Kolek at the championship parade, people aren't even going to know who you are. That's the most beautiful thing about Bitcoin. And that's why you get a coach from the Bitcoin Way. They'll help you to maintain your privacy, your security, and hold your own sovereign keys so that you can walk through a crowd of people and no one's going to know how much wealth you actually have. Schedule a free meeting with the team at thebitcoinway.com/partner/Dante-Cook. Kevin Warsh saying he's going to get inflation under control is like saying, I'm going to make this ball drop when I drop it from the air. That's gravity and it's already happening. All of the forecasts are already showing that inflation is dropping. So him saying he's going to get us to a 2% target is just actually playing with what's already going on in markets. Him setting up a task force, well, that's big news. That's him signaling that he's building the machinery to do whatever the task force says that is the right recommendation to do, which is we're going to keep doing this thing as we've always done it. When something breaks, we're going to be the backdrop and the backstop. And that thing that's going to break is the AI bubble. I am telling you that it's happening. We're looking at all the signs, and yes, there's going to be people that get rich quick. You're going to see your neighbor driving a better car, and what's going to happen is you're going to start investing in chasing assets and investments that you don't understand. And that's where the danger happens. Invest in the things that we know are going to be fixed in a world and age of abundance with infinite supply of everything. The only fixed asset coming out there that is out there right now is Bitcoin. The money printer will go burr. And that's why you want to be diversified into other assets like through SaaS mining. Buy a Bitcoin miner, but don't have any of the headaches and infrastructure associated with it. You send them money, they get you a miner, and they send sats directly to your wallet. Use the QR code to get started. Hope you enjoy the World Cup game and Father's Day weekend. Having a great father is one of the best blessings that you can have. And 95% of the problems that we have in the United States right now, whether it's single family homes, whether it's poverty, whether it's crime, whether it's drugs, is all a result of fathers not doing the job that they were called to do, which is the best damn job and obligation that you can have. Being a father is the greatest thing that we can do and that you can do as a man if you have that responsibility and that privilege. Happy Father's Day to all the great fathers out there. The biological fathers and all the other ones who are stepping up as fathers. That could be a friend's dad, that could be an uncle, that could be a neighbor, that could be a ball coach. Some of the best fathers and mentors out there aren't necessarily biological. Thank you for all the people that are serving in that role. Happy Father's Day, and I salute you. This is Dante Cook with Bitcoin Simply. Happy stacking.